Hey everyone, it's David. Today we're going to be watching a video on CNBC about the housing market being in big trouble. I think they're talking about affordability, probably some things going on with sales. We're going to look at that. We're going to talk about what's going on in the Portland housing market as a contrast. Here we go.
Today's sell-off dragging rates lower, though the 30-year fixed mortgage rate is still hovering near 7%. And now home inventories are surging in certain markets as a lack of affordability curbs demand. Diana Olick here with the latest details.
So let's look at that real quick. Interest rates are not good. They have been between 6 and 7%. They might be okay for you depending on your situation. If you don't own a home, if you're still able to get into investment property that cash flows at a higher interest rate, if that higher interest rate allows you to get into a property in a competitive market that maybe wasn't there before. What we are not seeing in Portland is really housing inventory increase. We actually have 31-year lows of new listings over the last 90 days. Essentially what we've seen is the high interest rates have curbed buyer demand, but they have also curbed new listings coming to the market. So supply and demand have essentially met to keep the Portland housing market competitive.
Diana.
Yes, Sari, the mortgage rate is right below 7%, but still bouncing up and down again. And new inventory and pricing data is showing why we're seeing a uniquely volatile market. After dropping sharply in January, the monthly payment required to purchase the average home jumped by nearly $100 by the end of February. At current income levels,
being a buyer in this marketplace, it is volatile because we don't know what's going to happen with rates on a day-to-day basis. Now, we do work with a company called Tomo Mortgage, and they have this really great product where on a date that rates decrease, you could lock in a rate for 90 days. If the rate happened to come down, you're able to do a one-time float down of your rate. It's a product that actually allows a buyer to have a certain amount of certainty going into their home purchase. If you want to talk about that, just go ahead and shoot us a message. But we don't really see volatility in pricing. There are price reductions. There's price reductions in every market. There's multiple offer situations in every marketplace. We're not really seeing volatility in pricing. Over the last 12 months in Portland, the average sales price has still increased a little bit above 5%.
it now takes just over 33% of the median income to make those payments. 24% is the 30-year average, and that's according to Black Knight. Now, that's nationally, but some of the least affordable markets are now Las Vegas, Nashville, Seattle, Miami, and Los Angeles. We actually went to an open house in Las Vegas last weekend.
So when we get into affordability, Portland is actually at a 20-year low for affordability. When you look at how they calculate it from the National Association of Realtors, the formula assumes that a buyer is going to put 20% down on a 30-year fixed rate mortgage, and that they're basing that off the median household income, let's say in the Portland metro area, against the median priced home. So we do have really low affordability, but if we look at Portland against the major West Coast cities, we are by far the most affordable, which is what I think continues to have people coming to our market. And there's probably gonna be someone watching this video that says Portland's a shithole or Portland's this, and whatever, your opinion is what your opinion is. The reality is we still have a really strong housing market in the Portland metro area.
2 sets of buyers came in 3 hours. The agent said inventory there is rising fast.
Especially here in Las Vegas, a lot of people moved from California thinking this could be where they were going to live in their no state income tax haven, and then got the call from work after COVID saying, nope, you got to come back home.
In fact, inventory in Las Vegas is now up 200% from a year ago, and prices dropped in January, but then rose into the first week of March, according to Parcel. Why? Well, those are closings, so contracts signed in January when mortgage rates hit 6%. Along with Vegas, Parcel is also seeing homes go for well below list price now in Phoenix, Tampa, and Charlotte, all of which were some of the hottest markets in the first part of the pandemic. Now, Sarah, not so much.
All right.
So when you look at the average list price to sales price ratio, and let's say the west side suburbs of Portland, the average list price to sales price ratio is about 1.5% off the list price, meaning that most people are negotiating 1.5% off the list price. But when you look at the original list price to sales price ratio, it's more of like a 4% discount. So you are still seeing people put houses out on the market, test a price, not getting that price, reducing the price, and then there's another negotiation that's happening most of the time. And that discount does not account for maybe back-end concessions like seller closing costs, things like that, because That's not something we publicly record generally. That's something that has to be asked. But if you're a buyer looking in this marketplace, if you are not in a competitive multiple offer situation, there is a strong likelihood you'll be able to negotiate a discount.
All right, Diana, thank you very much. Diana Oleg. Let's trade that. Tim, look, mortgage rates, we thought that they had seen the top and then they climbed up again. Now with this banking trouble, they're going back down. What do you do?
They're linear and they're connected on the way up. On the way down, look, there's also credit dynamics and lending dynamics that suffer in the back of what's going on. Banks are not giving more money away now on the count of what's happened over the last couple of days. There's no question about it. So lending standards will tighten up. I think if you consider, it's great that the Fed funds, I think, went from 469 down to 428 basically in one day. That does not necessarily mean the mortgage market changed. More importantly, the affordability dynamics that Diana just talked about are the ones we're talking about. And frankly, you could see that in the XHB. So the home builders ETF today down 2.25% on a day when you saw rates plummet. We know, and it's on some level, it's nice when the market has a rational reaction to the news that bad news was not good news for housing. And I think all that's what's going on. And again, the wealth effect across, okay, Silicon Valley is not USA, it's not Main Street, but I think some of these dynamics are slowly playing out. And I don't see why you want to own the builders, even on any weakness here.
Anybody disagree with that? Everyone's been trying to find the bottom in the builders and on rates.
Yeah, the problem, though, is, to Tim's point on affordability, who is going to be putting their house up for sale if you have a 3.5% mortgage or a 4% mortgage and you have to flip it out? You have to have owned that home for a long period of time to get some.
So he's making a really good point here, is that one of the reasons we're seeing less new homes come to the market, or less homes come to the market, less new listings, is because 85% of US households right now have an interest rate of 5% or less, or potentially no mortgage at all. So when you're looking at trading up into a new mortgage, a higher priced home in a lot of marketplaces with a more expensive market, it doesn't make a lot of sense. You know, in the Portland metro area, where it can be expensive to sell a home because of the average sales price, you might be able to, instead of selling your home, take that money you would have spent on selling and really, create a new bathroom, remodel part of your kitchen. We're likely going to see homeowners stay in their homes longer, which is actually going to restrict demand further. We don't have enough new building going on in Portland. We don't have enough homes coming to the market. So even with all this crazy economic news we have going on, high interest rates, less people buying, it's why we're still seeing the average home price increase, albeit at a slower pace.
Equity in it to make it worthwhile for you to turn around, buy something else for a 7% mortgage. Who's going to do that?
But doesn't that make it more attractive for a home builder, right? Because there aren't existing homes being sold. What's happening is there's millennials out there, and there's basically been 5 million more households created in the last decade than homes built. And so now people are looking to buy homes, and the existing homes aren't there anymore.
Are there enough, though? Are there enough people that are going out? Because what's really moving the market are people who are buying homes for cash now.
So that's not true in Portland. We have never seen a big glut of cash buyers. You hear about it, but if you look at it by percentage, it's less than 10% of our total market. So 90% of people are still going out and financing homes and getting loans. That's not true for us. Demand has lowered, but we've had such a lower supply that we do have enough buyers to buy all our homes. If you actually look at December, January, February, we only had 95 fewer pending sales than we had new listings during that time period.
That to me is a very, very small population that could buy a home.
Well, and some other part of just input costs, labor markets haven't really softened up in terms of those input costs. Copper prices are almost near 10 to 20-year highs. Lumber prices are down. But, the inflationary and the stickiness part of the PPI cycle is, if anything, has been, resurging a little bit. So there's not a whole lot of relief on the gross margin side. Again, is this a market where you want to be paying, I think, at least on a relative basis, above to where they trade to the S&P? I don't think so.
I feel like the housing trade has been all about mortgage rates for the last year and a half or so. And now today is the kind of day where you rethink the whole soft landing and what's going to happen to the economy, right? And whether the hard landing comes more into focus. Already the market was there.
Okay, that probably seems like it's a good stopping point. When we look at what they're debating there at the end is the volatility of the stock market. It's easy to trade in and out of the stock market. That's why you see pricing go up and down. It is hard to trade in and out of the housing market. It's what keeps a house a stable investment. Most people are going to fiercely protect their equity. But if you have any questions about the Portland metro area housing market, if you're a buyer, if you're a seller, maybe you're wondering if it's a good time to buy or sell, we'll be honest with you. We'll tell you if we think it's yes or no based on your exact scenario, but we can't help you with the scenario unless you get in contact with us. You can contact us at hello@hillshirerealtygroup.com. Make sure to like and subscribe to our channel, and we'll see you next time.